Good morning. Today we talk. Actually, today is should be the second last lecture for our quantum finance course. So remember in past 12 lecture, we talk about the basic concept on quantum finance. We talk about basic quantum field theory, especially for the quantum mechanics, and also talk a bit about the Schrödinger equations, the most important equation uh, related to quantum mechanics. Also, the most important part is we discuss how we can model the quantum finance world by the reinterpretation of the Schrödinger equations using the what we call the anharmonic model theory, right? And based on it, we develop our own system to calculate all those quantum price level, so-called QPL. And in fact, in China, it becomes a rather acceptable and natural for the quantum price level because they're easy to understand. And also we have the daily forecast for the finance product for the 120 products, including all those cryptocurrency, forex, financial index, and all those major commodities such as gold, silver, oil, cotton, that sort of thing. So together, every morning we also forecast all those what I call the nearby quantum price level, so that all, no matter you are investor or traders, you don't need to do any quantum finance calculation, but you can enjoy all those forecast results, and also you can make use of the quantum price level to do their own tradings or hedging. So in the coming two last lecture, we focus on how we can integrate all the theory and the concept and also the technologies related to two major component, quantum finance concept and technologies, together with some core AI technologies. Focus on neural networks, genetic algorithm, and also fuzzy logic, together with the chaos theory, to convert all the neural networks to become what we call the chaotic neural network. And also in the last lecture, we also talked a bit about some basic theory on the neural oscillator. Okay. In fact, as I always say, the whole world in fact is a kind of oscillation, so it's never stopping. In fact, it's some kind of very natural and also rather chaotic types of oscillation. And as mentioned in the last lecture, in fact, that kind of oscillation not only can be found in the nature, but also can be found in our bodies, ranging from our heartbeat to our brain wave, and also all those senses are all related to the chaotic oscillation. Okay, no matter whether you are aware or not. So the quantum oscillation, in fact, is a very basic kind of mechanics. Okay, in the natural world. So it's quite natural. We make use of it in our quantum finance. So today we talk about two topics on the application of quantum finance. Totally, we will talk about four topics. Okay, so this lecture I will talk about the first two, the basic talk, and the next lecture, in fact, is the one of the most important one. We talk about some more advanced topics on how to apply different kind of quantum finance and AI technologies to produce a more comprehensive, okay, and useful, okay, real-time forecast and trading system. Okay. In fact, these four lectures in more or less a bit on R&D side. So that's for my purposes, all the time I'll put it at the end of the course. Okay, so that for all those third year or also final year student, okay, have some chance of learning some more high level technologies, and it's also good for them for the future, no matter academic or career development. Because I always say, for computer science, especially on AI. Even though when you go outside in the industry as a kind of system developer or AI scientist, your work more or less is a bit on the size of the R&D level. So that's why in this two lectures we talk about this kind of a bit advanced application. Okay, so let's start. So as we always see, the market in fact is a kind of result. Okay, you can see with some what we call the embedded interactions. That kind of interaction can be related to some behavior or some philosophical practice, and in most of the time, it should be predictable and representative. Okay, so we got a pattern, what we said. So the problem is how can we model this role, and also in order to do what we call time series forecast. Okay, so is our focus in the remaining two lectures. Okay. So remember, in the past, mainly we talk about some basic terminologies. So we focus on three major things. First, financial trading and also hedging, as a kind of applications. Quantum finance as a kind of a new model to model the finance in the subatomic world. Okay, so it's more or less related to high energy physics. But lucky is we have a total new model in order don't need to touch on the Feynman path into which is rather sophisticated in some sense. And the most important part is in the past half a century we have some very new technologies related to AI, including neural networks, fuzzy logic, and genetic algorithm, and so on. Okay, so we already go through all the basic stuff. Okay, so together we finance two more technologies, right? On chaos theory and also on factors. Okay, they are all what we call the hotness technologies. Okay, nowadays when people talk about AI, so it's a very good start. So in this lecture we will talk about four different applications. First, how to calculate or evaluate the worldwide quantum financial price level. In fact, if you have go through the workshop, you should have some touch and feel on that. What I'm talking about today is we give you what we call a total picture. Okay, and that is important because as I always say, for the worldwide investor, you cannot force them to invest on any particular kind of thing, right? So if you could give the forecast, so better to provide all kind of forecasts. Okay, all those what we call international products. Okay, so why we say that? Because as I mentioned all the time in the course, by using computers, no matter simple logic or complicated one like us, we assume one thing is they should be more or less what we call natural. Natural in the sense that it won't be manipulated by a small amount of people. Okay, because we are using computer to do modeling, so it should be rather unbiased in some sense, which means it should be international. International means that the total number of people participate in the trading should be a very large amount, so that no one can what we call manipulate the market. And the second one is the total volume should be very large. Remember when we talk about the technical analysis, right? One of the basic theory is we are talking about global picture, international market. So that all the pattern analysis in the technical analysis can be done, can achieve what we call the over 75% accuracy. Okay, but I always say when I doing that kind of trading for so many years is the technical analysis is good, but they never tell us the exact value to do the investment. Okay, which means a bit to what we call subjective. Subjective means it really depends on the judgment of the trader or the analyst to do the what we call the decision making. That is quite dangerous because a human being all the times are, what should I say, biased by the what we call current psychological behavior. So for example, when you have already invested some tradings on a particular product, of course you might have some angle, even though the computer tell you another story, right? Or the pattern tell you another story. So as I always say, why not the whole job is done by computers, and by using the accuracy for the computer as a long run to make profit. Okay, so by using computer analysis to do that kind of trading, we are not talking about 1 or 2 day profit loss. We are talking about a long-term profit loss. Okay, because a computer system, when it can be done, most of the time it will be very reliable. Reliable meaning that no matter what the situation is, the performance is what should I say, more or less the same. So that's the reason why. And especially from nowadays, because as I mentioned all the time, over 90% of the trading are what we call phone tradings. So why not we give the computer to do the job? Okay, what we do is to control the risk, by doing the hedging or doing the stop loss. Okay, so all are related. So in the coming 2 lectures, we talk about how to calculate the content price level, how to do the worldwide prediction by using the chaotic neural networks, and then next week we will talk about some advanced topic, how to integrate with what we call the type 2 fuzzy logic. It's a very important concept, type 2 fuzzy logic. I will talk about this next week. And also the last one is how to make use of what we call agent-based reinforcement learning algorithm to do what we call content tradings. Okay, so it will complete the whole story for this course. Okay, of course the last 4 topics are a bit advanced, so I think that probably you have to take a couple of days, try to absorb and understand the what we call the whole concept. Okay, all like this. Okay, for the advanced course, at the end of the course, most of the time is that you can't fully understand all those theory concepts within 1 or 2 hours. But like this, you can have this as a starting point for you to understand more. Okay, of course. Another thing is do some literature review and readings, because all those topics we mentioned about is we have published some papers and even the book. Okay, and also some very good journal talk about that, so that if you want to get more information, you can according to my reference, read all those paper and journal. Okay, that will help. Okay, first topics content price level. Okay, for overall worldwide financial product. So first of all, what is meant by worldwide financial product? We are talking about 4 major categories. The famous one nowadays, the cryptocurrency. So if you check the cryptocurrency, you can see it's really rather, what should I say, it's really rather chaotic in some sense. As I can show you now. Let's see. For me, I am using 2 platforms. One is vivatrader.com. That one is the #1 most famous and popular cryptocurrency platform. Okay, so it contains all those major forex, gold and silver. They all have, and the most important part is it also have the cryptocurrency. So let's take a look. So some of the most basic type, the let me see, yeah, this one is the Bitcoin, okay, against USD. So they have 2. In fact, it's 3. Most basic type Bitcoin against Euro, and also Bitcoin against the US currency. Okay, yeah, Bitcoins against US currency. This one. In fact, the pattern are more or less the same against Euro and US. But of course, there are some fluctuation between the US and also Euro. Okay, so that's why the common trading product for the cryptocurrency normally is against the US number one, and secondly is against Euro. Okay, so you can see it's rather using a days chart, so then yeah, you can see it can fluctuate against 2,000 something to highest is 30,000. Okay, close to 40,000. So the average, okay, in 218, okay, and before that is just around 2 to 3,000, okay, and top 3,000 something, and then it jumps almost 20%, okay, up to 30,000 to around 139 something, and then it dropped. So in fact, it has a pattern, right? But the problem is how can we forecast the daily range? So it's another story. Okay. So what is we talk about? That's. So you can see in this table contains all the major trading product, or what we call the trading instrument in the technical terms. Okay, they include all the cryptocurrency, the basic 9, including the Bitcoin Gold, and the ETH, okay, Ethereum, the LTC, the Nikon, and also the XRP. That two is not so common, but the most common, of course, is the Bitcoin, and also what we call Bitcoin Gold. Okay, Bitcoin Gold. These two are the most common one. Of course, the number is Bitcoin against US dollar. Okay, so we have the cryptocurrency. We have all those international financial index. So you can see almost all, including the, so for example, the most famous, of course, US Dow Jones Index, the Nasdaq. In UK, the FT100, or what they call the UK 100. The same, okay. The FT 100 in UK, and also Hang Seng Index in China, in Hong Kong, and some others. Okay, so you can see all those major economic center, okay, and financial center. They have their own what we call the trading index. The basic concept for the trading index is the trading index are all international product, so it's more a bit natural because the volume is very big. And so many people ask, why don't we forecast the stock? The stock is good, but the stock all the times is more localized in some sense, right? So it's a bit more easy, comparatively speaking, to be manipulated by human factors. But when you talk about the index all the time is the average of all those major stock at that particular market. So for example, for the Hang Seng Index. Hang Seng Index contains all those major stock trading in Hong Kong. And same case for the Dow Jones Index in US, or all those ID company stock for the Nasdaq. Okay, so by trading the international index, more or less you are trading the stock in that particular financial center, so they are the same. But the difference is more or less it should be more easy to forecast as compared to forecast a particular stock. So that's why for us, we never forecast a particular stock, no matter how big or small it is. So as I always say, why not you just forecast the whole financial index for that particular region, okay, of the collection of the stock. So it will be more or less more safe, okay, and more accurate in terms of computational forecast. So that's the reason why. And also what we call the major commodities. Major commodities is very important because, as you know, all the major agricultural products, so for example, the cotton, the sugar, they are the major type. And gold and silver, of course, okay, the basic and the most important, okay, metal. And of course, the oil, okay. So we have two types. One is the US oil, and one is the what we call the European oil, two types. Okay, so they cover all those major product. Either is energy products, metal products, or the agricultural product. The three major components: agricultural, the metal, and also the energy, the oil. Okay. In fact, oil contains all those oil and also natural gas and this sort of thing. But again, for the representative oil, we talk about the two types: the U.S. oil, Texas oil, what we call, and also the European oil. Yeah, these two types. And the last one is the biggest one. Is what we call the financial forex. Okay, the forex pairs. So of course, out of it, the five most important currency, of course, U.S., Canada, and Japan, and Australian dollar, and also the British pound. Okay, the five major trading product. All the time we say major, it means that in terms of worldwide trading volume, not in terms of what we call importance, because there's no so-called importance. The only what we call major in the sense in terms of the trading volume. Okay, in daily basis. Okay, this fine. Okay. So why so many people why ask Japan, because in the old time it represent the fluctuation in Asia part. Okay, so it only reflects the trading volume, not the so-called importance. So it's two different concepts. So all the time when we talk about some major product, we talk about the overall worldwide trading frequency or worldwide trading volume. Okay, so the highest the volume, as I always say, that the bigger the market. The biggest the market, the more difficult for a particular group of people to manipulate the market. So by doing that, it's more easy or more possible for a computer to do forecast. Okay, because still nowadays, as I always say, you cannot predict human behavior, but you can predict some more natural behavior, like the weather or like the finance as a global market. Okay, so the market size is very important. Okay, so and thanks to all those major trading platform, and now we have almost more than 2,000 trading days for us to do network tradings. So as I always say, without all those trading days, we can't do anything. As I mentioned in the AI part, right? We are not using statistics. We are using neural networks as the major forecasting tools. By using neural network, we are talking about what we call the type 1 trading method, using what we call the supervised trading. Supervised trading means that we need a lot of history record, or what we call trading data, to train the networks. So without the trading data, we can't do anything. So the beautiful for the neural network is you don't need to know about the detailed mechanism, okay, how it works, but you need a lot of data to train the networks. So that is the totally different kind of method, okay, in terms of prediction system. Because in the old days of prediction system, we are not using that kind of method, right? So all the time we have to devise a very sophisticated model or forecasting models, and then based on the model, use the data to test for it. So at the traditional case, the data is more or less on experimental use. So normally we don't need a lot of data, right? But nowadays different. Nowadays is we have an engine, okay, called chaotic neural network, as I mentioned last week. So what you have to do is very simple. You only need to collect a lot of historical data, and split it into 2 or 3 parts. First part, say for example, 70% for trading, and 30% for testing. Or for some more serious evaluation, you will separate into 3 parts. The first part more or less more than 60% on training, and the other 20 to 30% on testing, and also 20% or a bit more on what we call validation. So either you're using 3 patch or 2 patch. Okay. So but the beautiful part is that you don't need to model the detailed mechanism because we don't know. Okay. What we need is a learning algorithm. Okay. And also, of course, some method to model or to extract the features from all those input changes. So that is the major concern. So as mentioned in the previous lecture, it should be lecture, let me see, lecture 6, right? We talk about the flow chart, right, for the calculation of the quantum price level. Okay, so remember that we are based on the history record for the 2000 days, and based on this we model the distribution chart, which in fact is the appearance of all those wave functions. And we are using finite differences, right, in order to calculate the lambda. Okay, and based on the lambda, we can calculate all those energy level, or what we call the quantum price level. So remember this fancy flow chart. So we have let me see, 8 steps, right? So first you read in all those time series. So and then you calculate the daily price return, the R, the small r, and then you calculate the quantum price return wave function, which means the distribution function, the PDF, right? And based on this, you can calculate the lambdas based on the comparison of the two sides, okay, for the right hand side and the left hand side of the central point, and based on our modified central equations to calculate lambda. So once we get the lambda, we can calculate all those quantum price return, okay, QPR. And based on quantum price return, we do the normalizations, and then we can calculate all those quantum price energy level, right, or what we call the quantum price level based on. Okay, so that part we are very good with that. So is the first part. So and this is the detailed program. We've done start from 9 years. Okay, and this year we convert into quantum finance software development kit. Okay, so be more simple, so that in the future all those analysts or traders no need to do the detailed implementation for the forecast system and so on. Okay, so make it more simple. So you can see in this program, we try to do the forecast. Okay, for all the product at the same time. Okay, and so first of all, you have to calculate all those quantum price level. Okay, so you have two choices. Either you separate into two programs. The first one is to calculate the quantum price level, and the second one calculate the what we call the forecast. So this section we only focus on the quantum price level, and this program tells you how to do the calculation for the 120 product at the same time. Okay, so very more simple, very more automated. Okay, so you can see the whole program in fact is not too difficult. The most important part is you have to make sure your trading platform got all those real-time information. Okay, because for some trading platform maybe they only have the forex, okay, but not the others. You may ask, the main reason why is at the beginning for the MT4 system, okay, people are working solely on forex investment. So that as you can see, all the MT platform providers, they must have forex trading, because forex trading is the most important kind of international trading. But as time go on, for all those biggest vendors, like I'm using forex.com, okay, it's the biggest one overall. So that people using different kind of financial instrument all want to use MT4. So that's why nowadays forex.com have contains over 120 products, including all the 4 categories. Okay, so that's the reason why. So of course, using looping system, okay, on all those 120 products, you can solve calculate all those quantum price level for all the product. Okay, and also of course make use of our quantum and harmonic oscillator function to do the calculation. And remember, in the previous lecture is because for MT4 we don't have the fancy root calculation, so that we have to make use of cardio method to calculate and solve this quadratic problem, right? So not difficult at all. Just a calculation only. Okay. So first you read in all those daily time series. Okay, it's a looping program, and then you calculate the mean and also standard deviation for all those distributions. So once you do that, you can generate the distribution function, and based on these two, okay, the slope, you try to calculate the lambda. Remember that. So it's not difficult at all. But you have to make sure you understand the basic concept. Calculate the lambda. Okay. And once you do that, you can try to solve the what we call the cardio formulation to sort out the equation and find all those quantum field or quantum finance energy level. Okay, so all into one. So you can see. So that part we make use of the cardio method. Okay, and then opposite simple. Okay. So you may ask, do we need to calculate in daily basis? It depends on your product. For cryptocurrency maybe, but for the other product, more of the time they are very stable in daily basis. But they have some what we call pattern shift in every 3 months. So I suggest at least every month or every 3 months you have to recalculate all those quantum path level. But within 1 or 2 days you don't need, because you can imagine, because it's based on the 2,000 days distribution. So within 1 or 2 days, of course the distribution is more or less the same. But when you talk about a period of time, say for example 3 months, maybe there is some pattern shift. Okay, not too much, but there are some changes. Okay, and you can see every product they are different. Although it seems to be the same, they are different. Okay, so try to run the program, you see what I'm saying. Okay. So implementation result. So once we do that, we can calculate all those quantum path level one by one. So it, in fact, is a kind of exercise. You can try it if you want. Okay. But of course, in the toolkit, we already implemented the system for you, so you don't need to do it again. So it's the first part, and the second part is how to make use of it to do the financial forecast, what we call the daily high and low. Okay. In fact, that kind of concept is a very, what should I say, very natural kind of thinking. So for example, when you want to do any trading for a particular product, what you want to know, and suppose you want to do what we call a day trade. Day trade means every day you do trading, and every night before the market close, you settle your transaction. Settle means you close the transaction. So no matter you are win or loss. So most of the time you have two times, whether you earn or loss, right? And you may ask, is there a case no loss or no gain? It's very seldom you can emerge it. Okay, either you learn a little bit, or loss a little bit, or large amount. It depends. Okay, so day trade have two important points. First is when your investment is very large, day trade is a bit better because you don't need to worry. Okay, and second is the government also recommend people for that kind of trading doing day trade, because day trade is you can gain or not, but won't be too much as compared with long-term investment, like the stock investment. Okay, so that kind of trading all the time is that to focus on what we call the very chaotic products. So for example, the forex. So for example, the gold and silver. That sort of thing. Okay, so it's two kind of investment thinking. When you talk about some very blue chip stock, okay, like the Apple, right? So most of the people don't do day trade. Okay, you buy in or sell out, okay, and you wait for a period of time. Many people will a couple of years even. So we are talking about two kind of concepts. Okay, when you're using MT system, most of the time, but I can say more than 90%, people are doing day trade. Yeah, theoretically speaking. Okay. Actually, also in Hong Kong and also in China. So it's two kind of concepts. So the whole theory behind is, as I mentioned before, is a kind of integration. Okay, we integrate with the quantum price level together to give up some level of energies as a kind of input for your chaotic neural networks, and together with the previous 2,000 days, okay, we train the system. So which means we train the system using what should we say, three kind of things. First, the data time series, the quantum price level, they are predefined, okay, and all those trading signal. So many people ask why we are using trading signal. The answer is very simple, because all the people, okay, no matter what, doing poem trading or doing the online trading, many people will try to take reference on all those important trading signals. So, for example, the number one, of course, is RSI, the MACD, the stochastic, the MA, and so on. There are many, more than 100, I can say. But the most common one is more or less the first 10. So why not you put all those financial index into your new network to give it more information to do the trading? Okay, that is the logic behind. So as mentioned, the whole chaotic network is based on the what we call the D oscillator. We already mentioned that, and the fancy equation from 9.5 to 9.8, right? Okay, not difficult. And here is the bifurcation. So we have already talked about this last week, so we won't elaborate again. Okay, so you can tell for the last week. And the trading equation. Okay, in fact, it's a kind of a feed-forward bifurcation model. So you can see the whole algorithm is more or less the same. The difference is we replace all those neurons by the new oscillator. That's it. Okay, so the whole replacement is simple, but once you do that, the whole network will become a chaotic neural network. That is the difference, right? So the implementation is still the same implementation as the backpropagation network model, but the difference is we replace it all by the new oscillator. Okay, so it's not difficult. If you already learn in the workshop and the course on how to program our feed-forward bifurcation model, replace it into the oscillator is not too difficult unless you are just calling the package. So as I mentioned, is for me as a student, all times is for that kind of network. Say for example, the feed-forward bifurcation network, the whole field net, the common networks is all the time I do the program by myself. At that time we are using C, but of course nowadays you can use C, you can use Java, you can use MQL, or even you can use Python. Okay, but there are two types of programming. The first is the actual programming. The implementation is 100% done by you. So by doing that, for me, say, oh, okay, this time we place the neuron into oscillator. For you, it's piece of cake, right? You just need to change one object type called the neuron, and you replace to another object called the oscillator. That's it. But you can imagine, but if you're using a package, say for example, a Python package for the neural network, it should be very okay, right? So you don't need to do many programs. But if you try to convert the networks into another neurons, that is the problem, because the package maybe don't allow you to do so. So that's why, as many students ask me, is if you have time, and if you want to do more what we call deep research, all the times the basic model is all done by yourself is better, so that you can create your own library instead of using other people's library. You know what I'm saying? So that is the major reason why. Okay. So the whole concept, we have already done that. Okay. So the whole system is something like this. So first of all, we initialize the program. So do the forecast. We have to check because this program is the day trade forecast program. So it will be done from Monday to Friday. And all the times, auto trader like me, we don't do any prediction or any daily trading in Saturday or Sunday, even though you can do that for different reasons, but normally you take a break. Okay. So first of all, you have to ask whether it's forecast day. Okay. If yes, continue. So that for each one, we try to read all those previous record. Okay. The previous record, we including all those time series, of course. The forecast result, because we daily we have to do comparison. Okay, the performance comparison, and all those the previous trading information. Okay, so that you don't need to do it again. Okay. And then you create the whole network, initialize the chaotic neural networks, and then register all the time series, do the forecasting, and do the trading. Once the trading is within your tolerance level, say for example is the 10 to the power -5, okay, which means 0.00001, okay, and it depends on your model. The better, the more accuracy, the better, of course. But as I mentioned, all the networks have their own what we call limitations, so that it will drop decline exponentially up to a level, and then it will stay. No matter how many what we call trading you are using. So that's why as a current challenge is all the time we need to change, okay, the network structure in order to make a breakthrough on the plateau part, okay, to make it more accurate in some sense. That is the challenge. Okay, so why not all the time people think about many different kind of forecasting system, okay, even nowadays. Okay, so once you do so, we complete the whole, and we will check whether it's within our acceptable range. If yes, okay. If not, do again, okay, until okay we have a sufficiently what we call good result, okay, and report it. So every day we do that, okay, and you can see for every single product, okay, the time is very short, okay, less than 1 second for every product, so it's very fast. The main reason why is that because of sufficient information, and also the information is not too what we call bulky, okay, so that the whole forecasting time is acceptable, okay, even for using a very basic, okay, Dell server, okay, so we won't rely on some what we call supercomputer to do so nowadays, okay, so that's why it makes the real-time forecast realistic, because at the end, doing the forecast is done maybe done by a trader itself on their own notebook or in their own data center. So all the time we are not talking about some quantum computers or supercomputer to do so. But and also we don't need. Okay. And then after that, cryptocurrency, that one is. And this one is the performance. So every day I will do the performance and do the ranking and report the top 100. Okay. The funny thing is that every day they are different. Okay, the ranking of course, right? We have some report, but there's some pattern. Pattern means that all the time there are some product. The top 10 product is more or less every day they are quite accurate. So as a long the investor will say, "Oh, I see." So that you may be focused more on the always top 10 product, so that the what we call the successful rate will be higher, right? So set that in point. This the previous paper we talk about for some comparison result. We compare with the feed-forward bifurcation model together with our model. Of course, we outperformed in terms of the recognition rate and also in terms of the speed. Okay, that's the major reason, right? So next week we talk about the other two. First is the type 2 fuzzy logic, and the second is the quantum trade. That part is very interesting. Okay. In fact, some of my faculty students are working on that. So if you are also interested, you can approach me, and I will tell you how to do that kind of financial research. Okay. So this week we talk about two topics, right? We talk about the basic implementation to calculate all those quantum pass level for 120 products. In fact, we are doing it in daily basis. And the second one is based on the integration of the feed-forward bifurcation model together with the Lie oscillator to produce chaotic neural networks using bifurcation method to do some forecasting. Okay, so what we call the level 1 implementations. Okay, for the edge level and also on the forecast result. Okay, so next week we talk about the other two, using the type 2 fuzzy logic and also using the multi-agent system. Okay, so let's continue next week, the last thought lecture. Okay, thank you.